Hello and welcome to Business Incorporated live on Channels Television. Here's what's coming up in the next 55 minutes. United States lawmakers have proposed a bill seeking to impose a 5% tax on remittances sent abroad. Is Nigeria at risk? We'll explore details. The International Monetary Fund has expressed concerns that the surging demand for electricity to power artificial intelligence data centers could create new challenges for energy infrastructure. Plus, markets around the world react to latest inflation reports. And it's good to have you join us. I'm Ladi Williams. Let's get a check on what's playing out with the commodity markets. Now, we'll start with oil. We're seeing oil prices are down right there. Big 1% drop each. That's for Brent crude and WTI, $65.99 a barrel. That's for Brent trade there, $63.03. That's what WTI is trading at. You know, crude stocks were up by 4.3 million barrels in the week ended May 9th, according to market sources. And we're seeing Petroleum Institute figures there, and gasoline inventories that fell by 1.4 million barrels. That's in the U.S. The fall in gasoline inventories comes as countries get ready to enter the Northern Hemisphere summer driving season. Roth Capital Markets analysts in a note said that the draw in products shown in API data was positive for the oil complex in the longer term, as it shows that the oil market was undersupplied. Let's get a check on metals now. See, gold prices are also down as easing U.S.-China trade tensions that suited fears of potential global recession, and we're seeing the impact right there in the metals market. 0.4% down. Spot gold $3,233 per ounce. U.S. gold futures, that's also down 0.3%. Spot silver couldn't stay up. It's down 0.17%, $33.05 per ounce. And we see platinum and palladium. Those two are shining right there, with platinum a bigger move at 0.44%, trying to get back to that $1,000 psychological level per ounce. And palladium, that's $957, up 0.16%. All right, let's get a check on other stories now. See, the International Monetary Fund has expressed concern there that the surging demand for electricity to power artificial intelligence data centers could create new challenges for energy infrastructure, prices, and emissions globally. In a statement, the IMF noted that AI technologies are reshaping productivity, employment, and investment patterns worldwide, with the potential to significantly raise the average pace of annual global economic growth. However, this economic potential is closely tied to a steep rise in electricity demand, particularly for data centers that power AI models and cloud computing. The IMF warns that the global economy could also face delayed or reduced investment in AI if electricity becomes unreliable or unaffordable for major tech infrastructure operators, and could threaten the very benefits of AI promises. And back here, we see Lagos State Governor Mr. Babajide Sanwo-Olu has called for broader inclusion of micro, small, and medium enterprises and high net worth individuals in Nigeria's tax net to address growing tax evasion and boost revenue collection. The governor made this recommendation in a statement during the opening ceremony of the 27th Annual Tax Conference of the Chartered Institute of Taxation of Nigeria in Abuja, pointing to a clause in the new tax reform bills awaiting constitutional approval which exempts employees earning below 800,000 naira annually from personal income tax as a potential gap that must be tackled. The governor further called for policy commitments by state governments to update laws, adopt technology, invest in data analytics, and develop human capital to fully harness the benefits of the reform. He urged subnational governments to play a leading role in the implementation of the reforms and not wait on the federal government alone. And the federal government may soon close a deal which will allow flat rates for cargo transportation on the platform of African Continental Free Trade Area. Minister of Industry, Trade and Investment, Dr. Jumoke Oduwole, was speaking on the sidelines of the Africa CEO Forum, says this is one of the plans to boost intra-Africa trade. Take a listen.
Intra-African trade with the AfCFTA has been one of our priorities. In the last 6 months, we've deepened that significantly. We've set up a central coordinating committee, so Nigeria's efforts are coordinated. I'm coming from Lusaka, where the AfCFTA had its first digital trade forum. You know that Nigeria is a co-champion for AfCFTA on digital trade, and practicalizing that agenda, attracting foreign investment for the continent and for Nigeria. This is where Nigerian youth are competitive. 50% of unicorns on the continent are from here. So Mr. President has championed this agenda. So the AfCFTA in all, we have, for instance, in Lusaka, we released insights from our digital trade survey. So in terms of services and where Nigerian techpreneurs want to go to, we've mapped, and it's unsurprising, the markets that have come: South Africa, Kenya, Ghana. They also have an interest in Egypt and Rwanda. So that's practical information. We're also releasing a market intelligence tool that tells MSMEs which goods are most wanted in Southern and Eastern Africa for Nigerian products. We're also, I wouldn't let the cat out of the bag, but speaking with one airline to have cargo flights, direct cargo flights on a flat rate to take Nigerian goods across the continent.
And now to our first conversation. We see Africa has long been a global powerhouse in commodity exports, oil from Nigeria, cocoa from Cote d'Ivoire, copper from Zambia, and platinum from South Africa. But in today's volatile economic climate, this dependence presents both opportunities and risk. With geopolitical tensions, fluctuating global prices, and climate change disruptions, African nations face urgent questions right now. Joining us to unpack this, I have Ted George, the Chief Narrative Officer at Cleo's Advisory. Great to have you, Ted.
It's great to be back, thanks.
Yeah, it's been a while. It's good to see your face again.
Likewise.
Right, so yeah, let's talk about resources now on the African continent. Talk to me about which African economies are most vulnerable to commodity price swings today.
Well, I think we're entering another phase where we could see commodity prices falling. A lot of Africa has ridden the wave of incredibly high prices, particularly from late 2022. But as you just reported now, oil prices are down to around $65 a barrel, much lower than where they were 18 months ago. And a number of economies have got used to these high prices. So particularly the case of Nigeria as a major oil and gas exporter, that's going to hurt. But also if we think of things like gold, which has been at record prices, cocoa, 4 times the price where it was before, I think everyone's been getting a little used to these very high prices. And so I think countries like Nigeria, Cote d'Ivoire really actually could suffer a bit of a shock over the coming months. If we actually do see a bit of a slowdown in global demand, prices start to fall. But I would have thought, countries like South Africa producing PGM metals, things like platinum and stuff that is used in the latest technology, they should see that demand remain pretty stable. So ultimately, it's just about using the resources and managing that change for all of these African economies.
Right, and I'm just imagining an African, country that has, most of these commodities all stacked, in one country. But just one moment, Ted. I just need to do this for our audience on DSTV. We're joining live coverage with the commissioning of and renovation and upgrade of Government Girls Arabic Secondary Schools. That's happening in Zamfara State. We'll join that on DSTV, but you can continue watching this on all other platforms. We have so many platforms. You can continue watching our show. So thank you, Ted. So I was saying, I could imagine, one country, having gold, oil, that's in fantastic, quantity, for exports, and seeing the price shifts we've seen, in recent times. So I guess if you're if gold is in season, then as a big exporter of gold, you enjoy that. Maybe oil is not doing so well. The profit you get from gold then supports your oil export, but not many countries have that kind of advantage in Africa right now. How have the global shifts, for example, China's slowdown, energy transition, how's that impacting Africa's export revenues altogether?
Yeah, well, I think it's a little early to say exactly what the impact has been from the latest market volatility. I'm talking here about the Trump administration tariffs or non-tariffs, exactly what's going on. That's led to a surge in imports in the US and then a drop off and a fresh surge. So it's a bit early to say what the impact has been. But we have seen one shift, and one is an energy shift. If you think going back only 10 years, Nigeria was exporting most of its crude oil to the USA. That has dropped to a trickle now because there's so much production in the US, particularly of shale oil and shale gas. So that's one big kind of adjustment to make. But also things like gold, are they really such a good thing to export? Switzerland has been hit with a 23% tariff. And the key reason is they export quite a lot of gold to the US. And that's actually affecting the trade balance as well. So I think basically a lot of it is about managing the resources wisely. And there are good examples of how that could be done. If you look at Botswana, it really has been very impressive the way it's managed the enormous diamond resources there to actually benefit the country itself. But sadly, we've seen too many examples of graft and of money going astray. And of course, this dependence on a single export actually causing problems with the currency, with inflation, and ultimately the standard of living.
And definitely the conversation about industrialization, that comes up a lot, adding value, to raw materials. Are we seeing any improvement coming out of Africa so far?
Well, I think the big problem with value addition industries is very often they don't add value. You have an industry, it might be a process, or it might be a refiner of oil or something. It brings prestige to the country, but it ends up losing huge amounts of money. And I think the basic key problem here, it's nothing to do with the African markets or the ability of Africans to add value. It comes down to power. You know this living in Nigeria. People living in Lagos very often have three generators. They have one when the grid goes down, they have a backup and a backup for the backup, even just to pump water and run the lights. So if you're producing commodities, let's say you're making cocoa products or you're refining petroleum, you need a cheap and reliable source of power. And if you're particularly going to be selling commodities on the international market, let's say something like deodorized cocoa butter, it has to be competitive with other countries which can have cheap and reliable power. So that's really a critical point here. Renewables can help with that as well. Drawing on Africa's resources like oil and gas as well can help that enormously. But until the power issue is fixed, that is always going to hobble any kind of value addition in Africa.
Right. And is the resource curse still a factor, or are some nations, are they breaking that cycle in Africa?
Well, I think the real problem with a lot of resources is that they can create enclave industries. If you think of oil and gas, if you think of a lot of mining, very often, particularly the large-scale mining, it involves a relatively small amount of workers. They are ring-fenced from the rest of the economy. A lot of the experts are foreign experts being paid cash. And there's such huge amounts of opaque money flowing around. There's a big opportunity for graft, embezzlement, and mismanagement. So I think transparency is a key way to address this. But I think there are certain countries which have done very impressively. I mentioned Botswana before. But we've also seen other examples around as well where there is a much more of an effort to try and get transparency in there. A project I'm currently working on in West Africa to set up an Africa Cocoa Exchange is all about that. And Nigeria actually is going to hopefully be leading a pilot with AFEX for the use of warehouse receipts. But that's all about making sure the cocoa is visible and actually unlocking more value for the farmers, the cooperatives, the local processors. So a lot of it is about the approach, but I think it gets back. The curse is if you're dealing with something like oil where it's opaque and it's ring fenced, because ultimately it's not really bringing much benefit to the wider economy.
And definitely we keep hearing most African leaders, talking about diversifying, their economies. Are there any success stories of reducing, all of that dependency, we see on one resource or a few resources?
Well, I think what's impressive is actually seeing, if you think Africa is very heavily dependent on food, but Nigeria offers a very good example just in one sector how you can change this. If you go back 10, 15 years, Nigeria imported nearly all of its sugar refined in bags. Then they gradually they gradually banned importing in bags, so there was a bagging industry. Then they started to import more raw sugar from Brazil and started refining it. Now they're exporting it. And so they have actually sucked that value addition away from Brazil into Nigeria now. So it can very much be done as a sector. We've seen this the same with cement. It's insane that you should be importing cement from another part of the world when pretty much every country has limestone. You can make cement anywhere. Again, it comes back to energy in that front. So I think really the answer here is to rebalance. There's nothing necessarily wrong about having a particularly large sector for exports or being particularly dependent on certain imports. You've just got to make sure that you actually grasp the value addition opportunities that they are and see if there's more and more things you can process in country. And referring to what the trade minister said as well, this idea of cross-border value chains. If you think in the case of Nigeria, largest producer of tomatoes in Africa, but half of them rot before they get to market. Couldn't we have some cross-border supply chains so we're not importing tomato paste from Italy?
Right, and on the currency front now, we do understand that a lot of African countries rely heavily on most of these commodity exports. But we still see, some African countries, their currencies are still quite strong, at this point. But, we did see a huge devaluation for the naira. Do you think, Nigeria's situation is more serious, than other countries when you compare, currencies?
Well, I think basically that the revaluation was necessary from an economic point of view because it has stabilized inflation, it has stabilized the currency. I think also getting rid of the subsidy on fuel as well. But of course, it caused enormous economic pain to the people of Nigeria. And I can see it. I fly into Lagos Airport now. I can drive straight into the center. I couldn't do that beforehand. There's so much less traffic which is out there. So I think the point is that was a correction. Going forward, all governments really need to think very carefully about how the balance of payments going forward is going to affect the currency. But I think one thing to bear in mind is to try and sidestep this. We have the Africa Continental Free Trade Area. We have things like the Pan-African Payment Settlement System from Afreximbank, where a Nigerian, let's say, could make a payment to someone in Togo or in Cote d'Ivoire using local currency both sides without the need for dollars. I think a lot more local currency trading could really help address this issue of not being so concerned about the value of the currency itself. Because why, when you have two African countries, are they both seeking dollars when ultimately they just want to exchange goods and be paid in their own currency?
Right, definitely a lot of eyes on the currency front there for Africa. But as the world shifts to renewables, how can African mineral exporters, take the DRC's cobalt, for instance, how can they avoid another boom-bust cycle?
Well, a lot of it comes down to the management of the resources. When times are good, you stack the money away. When times are bad, that's when you actually use that investment to try and boost the economy. And we've seen way too much boom and bust. But I would have said the medium to long-term outlook is very positive for large producers of things like copper, PGM metals, all of these things which are used in things like solar panels, which are used in wind turbines, and also in AI and data centers, etc. So I think the long-term and the medium to long-term is very positive on that front. It's just about managing the resources.
All right, so how will AI and automation, do you think that could reduce global demand for, Africa's labor-intensive exports at some point?
Well, I mean, it's a really difficult question. AI has affected every single sector. I cannot think of any sector that hasn't been affected by it. And obviously, there's a lot of worries that it'll take away jobs. I think really AI offers such really wonderful possibilities for Africa because one thing is everything about online learning. If you imagine the ability to get education to everyone using AI to fine tune that as well. I think everything about efficiency of systems, AI can help hugely with logistics and transport. We're talking here about getting efficiency out of the system rather than removing workers. But if you bear in mind the majority of the population work in agriculture or supporting the agricultural sector, we need the farmers in the field, we need the drivers, we need the people in logistics out there, we need the manufacturers. So I think ultimately AI could be a huge help. Maybe it might take some jobs if we're thinking things like call center jobs, which are more done by chatbots nowadays. But ultimately, China and other countries are trying to find somewhere cheaper and more efficient to do manufacturing. The opportunity is here for Africa. Fix the power. That will be important for AI as well, as the IMF was saying. But essentially, Africa has this wonderful demographic bonus, young, a lot of workers there. The opportunities here, AI could enhance that.
All right, I'll see if I can, defend my job against AI, going forward.
Me too.
Thank you so much, Ted George, Chief Narrative Officer at Cleo's Advisory. Thank you for coming on today.
Thanks for having me.
All right, let's head straight to the market, see what's playing out in on the African continent. We did see the NGX not looking so bad at intraday, and I guess it's following from what the gains that we saw yesterday. If you can put that up for me, we'll see what's happening on the African continent. It's a 5 basis point rise. They're marginal. That's for intraday. We'll see if that holds to the end of trade. Then South Africa's GSE 0.21%. That's up. And other markets we track on the African continent, we see in North Africa, the EGX 30, we see that's also holding up at intraday, and the Nairobi Stock Exchange. We'll see how that looks. That's 1.26%. That's for yesterday. That's for the Nairobi Stock Exchange. Marginally down. That's EGX 30. Let's get a check on what's happening in the fixed income space now. And we'll also be talking about remittances, because I've seen reports that United States lawmakers proposed a bill seeking to impose a 5% tax on remittance sent abroad. We'll also look at the latest Sukuk offering by the Nigerian government. Join us for this. We have Akbere Oputu. She's the chief dealer at Lotus Bank. Great to have you on the show, Akbere.
Thank you for having us, Laddie.
Yeah, so, talking about remittances there, how do you see the plans by U.S. lawmakers?
Okay, so I think it's a good move for the U.S. in a bid for the President Donald Trump to make America great again. They've come up with this policy on outbound remittances from the U.S. So is this 5% tariff on outbound remittances is actually supposed to boost their economy. So I don't think we can blame the United States of America for doing this right now. They've seen outward remittances of over $72 billion in 2022 go out to different foreign entities. It's just really bad news for Nigeria, because Nigeria is one of the countries that has topped the list for benefiting from these outward remittances. We were among the top 10 countries who benefited from this. So what this means is that if you have senders or people remitting their funds offshore, it means the sender of the funds will be charged a 5% tax. So that would just actually affect inflows that we get into the country, and it will cause more devaluation for us, because we've actually been benefiting from these remittances. We got more than $20 million from the U.S. in 2022, so we've been part of the benefactors from this. So it is actually good for the U.S. and bad for the rest of the world.
I guess at this point we need to be talking make Nigeria great and try to negotiate this deal before it actually becomes law. I'm sure, our leaders there will be looking to, talk about that, so we don't impact our remittances. We really need them at this point. But let's pivot back to the fixed income market here. We've got that Sukuk offering. Talk to me about the, current macroeconomic climate, including inflation and FX volatility. Does it affect the attractiveness of, Sukuk bonds, compared to conventional fixed income instruments?
So the Sukuk is actually local bonds. It's Naira denominated. It has nothing to do with what is happening in the FX market. So a lot of times when we see the regular bonds or the federal government or the central bank issue OMO, we see a lot of foreign investors coming into the market at that time, because they are the major players in the OMO space. They have to bring in foreign currencies and actually do conversion for them to invest in these papers. We know the OMO instruments and the federal government bonds are trading above 20% level. So it's actually very liquid. It's easier for those foreign investors to bring in dollars, convert their funds, and actually trade in that space. But the Sukuk market is quite different. The investors in these instruments are also different. They are mostly local investors who are actually looking for Sharia compliant instruments to be able to invest their funds, and when you're one of those investors in this Sukuk instrument, you're actually looking for a way to impact the economy and grow the economy. The projects that this Sukuk actually covered are kind of like constructions, facilities, infrastructures within the country. So most investors of this instrument are either the pension banks, real-time investors, so who are actually looking to grow the Nigerian economy. So whatever happens in the FX space is not directly impacted in what we see in the Sukuk market.
Right, definitely. We'll see that there's some kind of a difference, or what sets the Sukuk market apart. But we see the DMO has hinted at expanding Sukuk funding to, revenue-generating projects. What sectors do you think could benefit, from this shift?
Oh, okay. So we're actually looking at real infrastructure projects. This is the 7th Sukuk issuance being done so far, a total of about 300 billion. We saw the first redemption of Sukuk last year in 2024 September, where the government actually redeemed and they made payments, showing strong foot on how the Sukuk actually works. So this is the 7th issuance. It's actually for bridges, for rehabilitation of road projects. And what makes the Sukuk paper very, very interesting is that you actually can see the underlying asset for which the funds are being utilized for, so which is good for transparency for the government. Apart from that is the minimum amount that the investors are looking to put down for this paper. It is one of the shortest tenors that have been issued so far. It's a 7-year paper. It's quite very competitive at a rate of about 19.75%. So this tells that government is actually looking inwards for investors to get good returns for their investment. The minimum amount that you are looking to invest in this paper is 10,000 naira, which is quite small. Is an all-inclusive paper. Is going out to everyone in the market, unlike the federal government bond where the minimum amount is about 50 million, $1,000. So this is actually very, very interesting for investors to participate in.
I guess at this point, I need that urgent 10K to make this happen. Yeah. It's no longer urgent 2K. At this point, but with over 1 trillion naira raised, from Sukuk, I think since 2017, how effectively has this translated, into visible infrastructure improvements? I know I see all those banners, everywhere.
So the thing with infrastructure is the continuous maintenance of these projects. If you go to, for one that I'm very familiar with, if you go to the CMS, if you live in Lagos, if you fly that route, you can see what the Sukuk 5 bond was used for. So we have a lot of projects that are coming up in the northern region of the country. The Sukuk 6 was majorly for road construction projects which were done there. So you can actually see this project, and over time, maintenance culture for Nigeria is very, very important, that these roads are actually maintained over the years. So if you raise a paper and you're going to do a road construction project that's this 7 is going to take you maybe, it's a capital project, so it could take 2 to 3 years to be able to complete this. And in the time frame, you have to still keep on doing those maintenances. This particular administration is very big on construction. We can see what they are doing on the Lekki axis, trying to do the railway. So we're going to see a lot of floats on this Sukuk paper come up. What we're clamoring for is for shorter tenors, which can be used for the maintenance of the already existing project. And we see this administration doing a lot on construction and road rehabilitation.
So I guess Sukuk doesn't just do construction alone. It also has a thing to do with maintenance too, of most of the projects.
Oh, yes, of course. While you are working, especially on road projects, you have to also be doing maintenances along the line. So, which is part of the funds that are being raised. It's not just to issue the project and go to bed. They are also going to be used for maintaining these roads that are being, these projects that are being done.
Yeah, maintenance, very, very important. But, we'll still be talking a lot about, debt sustainability. How can Nigeria balance, infrastructure financing needs with, concerns over rising public debt?
Okay, so like I said, this administration has actually been working really hard. They've been raising tariffs, your electricity tariffs. They've also been doing, sorry, doing a
Sorry
lot
about that.
on internally generated revenue in terms of your VAT and your different tariffs. So while they are creating these debts, they're actually looking for ways they can raise liquidity, raise funds long term to be able to balance the debt the administration is actually going into. So we've seen a lot of different tariffs being put on the economy to the users. So while taxpayers' monies are being used to do this project, we're actually seeing a lot of revenue generation from this administration.
Yeah, thank you so much, Aquaware. Let me give you time to catch your breath there. Thank you for joining us today. That was Aquaware, which is the chief dealer at Lotus Bank. Thank you for breaking it down for us today.
Thank you.
All right, let's get a check on what's playing out with other markets now. We see stock futures were little change today as Wall Street looked to extend a strong start to the week. But before we get there, Middle Eastern markets, Abu Dhabi, 9,613 points. That's down 0.13%. Dubai index, so we're seeing negativity right there in the UAE. That's talking about the Middle East. And for U.S. markets there, we're seeing a slip there for the Dow Jones Industrial Average. That's marginal drop there, 0.05%. S&P futures, 0.09% down. The Nasdaq futures, on the flip side, that's looking better with a 4 basis point rise. But let's hear from our correspondent, Maria Bird, on what played out in the markets yesterday.
U.S. stock market rose on Tuesday as the Dow Jones was up at 0.6%. The S&P 500 also up at 0.7%. And the heavy tech Nasdaq led the way at 1.8% up. As a consumer inflation report revealed that there was an easing on prices in the month of April. This comes in the wake of what many are hopeful will be a positive trade relationship between the U.S. and China in the coming weeks. As investors continue to watch the stock market, they are very hopeful to see that the U.S. economy could be on an upward swing.
Thank you, Maria, there for giving us details of what happened in markets yesterday. Let's take it on to Asia now. See, Asia-Pacific markets, they were mostly higher today as investors assess U.S.-China trade talks after key Wall Street benchmarks rose on the easing trade tensions. See, Shanghai there, that's up 0.86%. To close today, 3,403 points. The Nifty 50 in India, a recovery there, 0.36% up, 24,666 points there for markets in Asia. All right, so over to Europe now, where Lars Holt with DW joins me now from Berlin. Talk to me about what's playing out there. Great to have you. How are the markets? Definitely, I know the markets. We love to talk about the markets at this point. Great to have you, Lars. So, on another note, though, but we're seeing Elon Musk is making headlines in Europe, just as he's been stepping out of the political spotlight in the U.S. What can you tell us about Musk's latest dealings?
Oh, yeah, I can definitely tell you a little bit about Elon Musk here, but let me just add one thing that I just noticed. If you look at how the indices moving here at the markets, not much going on around the world, and it's really not much going on here. With a really, really slow day, we have the stock markets in London flat right now. We also have Frankfurt and Paris not moving much at all, but we do have confidence in the market slowly coming back, and that, Ladi, has a little bit to do with the US, of course, with people getting out of stocks there into European stocks. And even though we don't really see that transpire in trading today much, we do see it in the mood that investors are having here when you talk to people in Frankfurt or so. And when it comes to really this idea of getting away a little bit out of US stocks, that of course has a lot to do with Donald Trump and with, as you just noted, Elon Musk. And yes, he is making headlines here right now, because Elon Musk here in Europe is also, of course, highly controversial. The EU has just put together some numbers upon request from a politician from the Green Party in the European Parliament. And they told us that the world's richest man is currently receiving hundreds of millions in subsidies from the European Union to several of his businesses. Now, that's sometimes it's just straight advertising contracts, 630,000 euros that the EU spent on extra advertising. But also there's the big bucks, 177 million euros that the EU just paid to Musk's SpaceX for some satellites he launched with his Falcon 9 rockets. Now, those satellites were needed for the EU's own satellite navigation system, that's called Galileo. And now these are more or less regular business deals, of course, but there's also subsidies deals, 150 million that the EU pays for Tesla and its subsidiaries to put together charging infrastructure. And a lot of this has come into question.
Yeah, Musk, definitely a very busy man right now. But while Musk is mostly involved in U.S. politics, he's also, inserted himself seemingly into European politics. Does that help or hurt him now?
Well, Adi, it certainly doesn't seem to help him. Here's a story with Musk and the EU, or Germany for that matter. Musk has often targeted the EU and criticized the bloc here. He's certainly contributed to US President Trump's outright hatred of the EU. And that's why many have said it is unacceptable that Brussels is paying him any money at all. Daniel Freund is the EU parliamentarian from the Green Party that I just mentioned that had that request out to get those numbers on how much the EU is actually shelling out to Musk and his companies. And Freund here, that parliamentarian, he has said that, I want to quote him there, "This man is an outspoken enemy of the EU and our values. It is not okay that we're paying him, already the richest man in the world, hundreds of millions in subsidies." Now, the EU has already been on the case, however. It's cut down sharply on all business with Musk, including cuts at Twitter. But some business, it seems, Brussels can also not just get around doing, like those satellites for Galileo, the navigation system here, for example. They had to be launched. And there were problems with the Ariane rocket that the European Space Agency originally wanted to use. So SpaceX was merely booked because there was no other option. But Brussels, it seems, will be working hard towards avoiding such scenarios in the future.
Right, and was Elon Musk's foray into politics, I think that's detrimental to his business then.
Yes, I think so too, Ladi. Of course, it's hard to say. After all, most of Musk's business is, of course, in the United States. And I've seen some statistics about subsidies and government programs that he's receiving over there. And that is billions of euros. Also considering that Musk has Donald Trump's ear. And he is actually right now on a trip to Saudi Arabia and Qatar with Trump and will likely make whatever deals there. He might be getting out on top anyway. But with regards to Europe specifically, I can tell you, Ladi, that Musk's politics have cost him dearly. Sales at Tesla, for example, we've spoken about that before. They're down everywhere and catastrophically so, with sales in Germany and Scandinavia down around about 70% over a year ago. So in Europe, people are done with Musk, and so are politicians in Brussels, apparently.
Yeah, definitely. Investors are not that forgiving at this point. But I know we have some good news in Germany, I guess. I see Germany's inflation rate, that dropped to, I think, 2.2% in April. I'm wondering if that's being felt at the stores.
Well, as I said earlier, we don't really see that translating into anything that we're seeing in markets today. I mean, it's of course economically good news that the inflation rate is slowly inching down as it has been for a while. Like I said, today markets are flat. What people also had an eye on over the last hour here, and that I think will play a much bigger role now in markets, is that our new Chancellor Friedrich Merz just gave his first address to Parliament, talking a lot and in some detail about his concepts for the country and particularly, of course, for the economy. I will go through some of that in detail, Ladi, and I'm pretty sure I can tell you more about that tomorrow.
All right, thank you so much, Lars, for giving us details for what's playing out right there in Europe.
Good talking to you, Ladi.
Same here. All right, let's get a check on other stories now. We see Namibia is advancing its renewable energy strategy by planning to add about 93 megawatts of renewable energy capacity by the end of 2026 as the financial year. This initiative is part of the country's broader goal to reduce its reliance on electricity imports, which currently accounts for over 60% of its power consumption. A significant component of this expansion is the construction of the country's largest solar power plant, a 100 megawatt facility in Rosh Pena. This project is being developed by Chinese firms, China Jiangxi International Economic and Technical Cooperation Co. Limited and Chint New Energy Development Co. Limited. The plant costing approximately 1.4 billion Namibian dollars is primarily funded by a loan from the German Development Bank, KfW, with NamPower covering the remaining costs. Construction is expected to take 18 months, with commercial operations commencing in the second quarter of 2026. We see the 2025 economic survey published by the Kenya National Bureau of Statistics has revealed the country's gross domestic product expanded by 4.7% in 2024. This was a slow growth rate compared to 5.7% reported in 2023. In its report, KNBS indicated agricultural, forestry, and fishing sectors that grew by 4.6% compared to about 6.6% in the previous year. And the aviation sector contributes about 3.1% to Kenya's GDP, and with a value of $3.3 billion, generating about 460,000 jobs. According to a report, airlines, airport operators, and on-site businesses contributes about $1 billion and creates 5,700 jobs, while air navigation service providers and manufacturing yield about $136.2 million right there in Kenya, creating 15,400 jobs. Tourism supported by aviation, on the other hand, that contributes about $1.2 billion to the country's GDP and employs 242,000 people. And the Bank of Uganda is maintaining a tight monetary policy stance due to prevailing global economic uncertainties. The BOU's Monetary Policy Committee has held the central bank rate steady at 9.75%, citing domestic and global uncertainties and elevated risk to the inflation outlook. The Bank of Uganda governor stated that the current policy is appropriate for maintaining inflation target and supporting economic growth. The inflation outlook remains broadly aligned with earlier forecasts, with slightly lower near-term projections. Core inflation is expected to average between 4.5% and 5% in the 2025-2026 financial year. All right, let's get a check on what's playing out in the crypto market now. We're seeing mostly green on the screen there with, I guess, the bulls trying to get back into the market. Ethereum, big 3.72% jump. Bitcoin, that's 0.24% up. A few pockets of red with the likes of SWI, Book there in the red, but XRP is up 2.77% last time we checked these numbers. All right, let's get a check on some top headlines there. We see within a few minutes, that was yesterday, a massive Bitcoin transfer involving 2,000 Bitcoins was spotted among unknown whales. According to recent data from blockchain monitoring firm Whale Alert, the transaction worth $206 million comes as the crypto market resumes its bullish trend, but at a slower pace, sparking discussions about among the crypto community there. Now we see a forecast there is $130,000 Bitcoin coming. That's according to data from Polymarkets, a popular prediction platform there. According to the platform, traders believe that there's a real chance that Bitcoin will trade at above $130,000 before the end of the year. Well, I guess who knows? This could happen or maybe not. Now we're seeing Jeremy Da Vinci, an early Bitcoin adopter and YouTuber, has published a tweet that a post on X that gained traction quickly with the crypto community. Da Vinci has shared a CryptoQuant chart showing a drastic decline in the Bitcoin supply held on various cryptocurrency exchanges. He believes that soon it'll be quite hard to buy any Bitcoin at all. Quite an interesting one there. But let's bring in Rume Ofi now, financial market analyst, to bring us up to speed on what's playing out. Hello, Rume.
Good afternoon, Ladi. Nice to have you back.
Yeah, it's been a while. Yes, I've been back now, and this is the first time we're speaking. Great to talk to you again, Rume. So definitely so much to talk about since the last time we spoke, and definitely is about the growth of Bitcoin in Nigeria so far, and most of Africa. How you seeing what's playing out now? And we're seeing the projection there from my previous headline that it might even get more difficult to buy Bitcoin at some point.
All right, so I think we're making huge progress in the country right now. We're making huge progress, but I think it has to be deliberate. Our recent laws recognize Bitcoin as a security, which is not supposed to be so. We need to start speaking on that. We also figured out that we don't have a very strong rule yet of Parliament regarding stable coins. In other parts of the world, it is also being in place. So I think the National Assembly needs to come up with something like that so that it will enable players in the industry understand what the laws are, or those coming into the country to also understand what the laws are as well. Then also we observe that the agencies of government, their information dissemination also need to be worked on. The current SEC leadership is doing very fantastic on that, but I think information is being consumed differently in this part of our world and in the industry entirely. I figured that it will make more sense if the agents of government start putting some of this information out on social media, because we have a lot of our young people on social media rather than press statements, which are also very, very good. But social media helps to make sure all of those information and it has to be deliberate, using advocates like myself and a couple of my colleagues, to be able to tell people what not to do and what to do. It has to be deliberate. It has to be more, because as I'm talking to you, a lot of people are still getting themselves involved in Ponzi scheme, which is really, really bad. So in all to put together, I think the government need to intensify the adoption of this innovative technology.
All right, but Ruben,
in order to curb what we have as unemployment in this part of the world.
Okay, Rumi, definitely we've heard a lot about that debate, about in other countries, if Bitcoin
I can hear you.
If Bitcoin is a security or not. We've had those arguments, in the past, but for the classification here in Nigeria, what is really wrong with Bitcoin being classified as security? All right, I guess we're having network issues there, but definitely we're still trying to have that conversation about why Bitcoin and some of these cryptocurrencies cannot be classified as securities. So Rumi, I don't know if you can hear me now. All right. Okay, we'll try that again. So Rumi, I was asking, why is it so bad, for Bitcoin to be classified, a security? Okay, yeah, the internet's not letting this conversation, happen, at this time. But, definitely we keep, trying to understand, this classifications, about Bitcoin. We've had in the U.S., with the Securities and Exchange Commission, they did classify XRP, as a security one time. But I think the XRP army won that battle. But let's try and get Rumi again this time. Rumi, can you hear me?
I can hear you loud and clear.
Fantastic. Let's try and have this conversation now. So why is it so bad for
it's
Bitcoin?
Coming in and out, but
why is it so bad for Bitcoin to be classified as security?
So if it is being classified as security, it further suggests that the purpose of Bitcoin being a way to make money, which is not so. Bitcoin is just is not a money-making venture. Bitcoin is a way to save value, is a way to transfer value. We understand that there are various cryptocurrencies in the world where people solely buy them just to make money, but this is quite different. So it has to be classified properly, like the way it ought to be. So I believe the authorities actually understand more study of this asset class. It's quite new, quite all right, but a couple of things also need to be done. So I really don't think it has to be classified as a security, which also puts it as an asset class specifically just to make money. I really don't think it had to be that way. So if it's being seen as a security, it's going to stifle all of the innovations that are going to be built towards using this technology to work. So, for example, all of the things that comes with the industry is going to be seen from just a venture of making money, most especially in Bitcoin. In terms of all of that, I think a lot still needs to be done.
All right, I guess that argument about some people being in it for the money or for the tech, I guess maybe they've seen that majority of people are mostly in it, for the money.
So Satoshi Nakamoto actually said this is an electronic peer-to-peer system of transferring value. All right, it didn't say this is money that's going to overtake the naira or overtake the dollar. So it's a different ecosystem entirely, and I think a lot of people need to understand this so that we don't miss it and say, oh, I'm getting involved. A lot of people have gotten involved in the past just to make money, and at the end of the day, because of that mindset, they've lost a lot of money in the process. This is a transfer of value. See it as you see the gold and a couple of other asset class that are valuable.
All right. Yeah, definitely. It all depends on, where you're looking at it from, at this point. But Rumi, thank you so much. Even though the network tried to, disrupt our conversation, thank you for staying on, and definitely we'll catch up again.
Thank you very much, Ladi.
All right, so, there you have it. Most of the markets quite quiet, at this point, even in Europe, according to Lars Holter there. But we're seeing a big recovery right there for Bitcoin. There's green on the screen. Oil is still struggling, at this point. But that's how most of the trades are looking today. Thank you so much for watching. I'm Ladi Williams. And from me and the team right here at Channels HQ is bye for now.